Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is February 9, 2025, one of my favorite times of the year, February, simply because it is reporting month. Companies on the ASX, or many companies on the ASX, have to release either half-year or full-year results by the end of February. And one of the reasons I really like reporting season, whether it be half-year or full-year results in February or August, or even Appendix 4C 5B month, we have 4 of those during the year, is because a lot of times a company can release results that surprises the market, particularly when it positively surprises the market, and that can lead to a breakout in the share price. And that is exactly what I'm looking for every single day. So I do find there are more breakouts this time of year than other months. So there can be breakouts those other months, but February and August tends to see the most breakouts. So I'm always looking for a really positive reaction from the market when a company releases their results. In the last week, I can think of Nick Scali, positive reaction from the market. Share price went to a new high. But on the flip side, Beach Energy, share price or chart looked pretty good, released their results, and sentiment has just collapsed for that company. Okay, so what I'm going to do in today's video is I'll go through what I usually do, go through indices, commodities, and some commodities charts look pretty good right now. And that's excluding gold. Gold looks pretty good, has been looking good for a while. But copper, even iron ore is starting to look good. Then we'll have a look at Bitcoin and Ethereum, then bonds, currency, and then we'll go into some individual companies charts. I haven't gone through all the charts I usually do during the weekend. So there are quite a few of them on my watch list I haven't gone through. So I still have about 13 or 14 companies, I think, that I am looking at closely. And I'll show you those charts. Okay, so let's start off with looking at the Aussie Indices. Really interesting week. And you can see that when I go to the weekly chart. In fact, let's do that now. Let's start with the weekly chart. Really interesting week. And when I say interesting week, this is sort of fairly bullish one-period candlestick. The reason it's fairly bullish, I'm not sure if this has a name, is because there's a long shadow behind the main body, which means there was a lot of buying coming through that period. And the reason why it seems like there was a lot of buying coming through in the past week is because we started the week really negatively. And that was on Monday because of tariffs. Our market dropped a fair bit. In fact, the XJO fell, what was it? 1.8%. That was a low, a lot of panicking, maybe not a lot, but there were some people who probably panicked, sold on that day, and that was the wrong choice because the market rallied during the rest of the week and it almost closed near the start of the week. Not quite, almost close. So a lot of buying came in during the week. Trump decided to pull those tariffs for whatever reason. He's allowed to do that, I suppose. But the market, the XJO, nearly finished an all-time high. So hopefully you do not sell on a panic on Monday's session. Maybe you bought some shares on that day. So in the end, nothing wrong with the XJO, nearly at an all-time high. Weekly chart looks good, looks pretty good. And again, that 1 week candlestick is a pretty bullish one-day candlestick. Daily chart still looks pretty good. No reasons to even think about selling right now. I'm still getting or reading articles or listening to podcasts. In fact, there was one article saying, if you're concerned about the market, here is what you can do with your money. And at this point, why would you be concerned about the market? You might think it's overvalued, but the market can remain irrational for a long period of time. We could see the XJO go all the way up to 10,000. And at that point, we're saying, well, it's still overvalued, but it could do that. It could do that. We've seen that in many, in fact, probably all bull markets. It does get overvalued and it keeps on going up until there is some catalyst to force it down. So we haven't seen that catalyst just yet, and it might happen next week, next month, a year from now, 2 or 3 years from now. We just don't know. So this is why technical analysis can really help, because at this point in time, there's no reason to think about going to cash, even though, probably right, the market might be a little bit overvalued. Okay, so that's the XJO, a pretty good week, considering what happened on Monday, but for the whole week, it was down 0.24%. XSO, this is another really bullish one-day candlestick. Went as low as 3,160 and closed at 3,229. And yeah, really, in fact, it was only down at 0.15%. If you have a look at the daily chart, The XSO fell a lot on that Monday. In fact, it fell, how much did it fall? 2.28%. So again, there would have been quite a few people selling or panicking on that day, and they sold, and then really good response after that. The next 3 days up, in fact, it almost recovered all the way back up to where it started. And right now, the XSO is at a really important level. And we can see XSO has been having trouble, really difficultly getting above this dashed line, which is 3,230. It's been having trouble since October. So that is a bit of a resistance level for the XSO. It's pretty obvious when you look at this chart. It's an obvious resistance level. And if it gets above that level and stays above that level, that would be a really good move for small caps on the ASX. So at this point in time, it's priming for a breakout. That's what I'm going to say. It's priming for a breakout. Look for that breakout. Maybe not tomorrow because Wall Street was down, but maybe during the next week or 2 weeks, we might see breakout for the small caps. Okay, so that's the Aussie indices. Nothing to be concerned about. In fact, looking overall quite positive. Now, Monday session more than likely will be down because of what happened on Wall Street on Friday. NASDAQ down 1.3%, Dow Jones down 1%, and Russell 2000 down 1.2%. So I do expect our market to be down at least 0.5%. We'll just say that, at least 0.5%. Worst case scenario, maybe down 1.5%. So somewhere in that area. Okay, so let's turn attention to NASDAQ. And NASDAQ. Now, if you just look at NASDAQ over the past 2 months, just going sideways, a bit of volatility in there, but going sideways, I'd like to see it get above 22,000. That was the highs the NASDAQ saw in middle of middle of December 2024. It is really struggling at this point, just going sideways. This could be, it just could be having a nice breather. Now, we all would need to breathe, and sometimes we're breathing, particularly if we're doing some strenuous exercises, we are breathing a little bit more. And it's really good when you're undergoing some strenuous exercise to take a breather. And NASDAQ, over the past few years, has gone up a lot. So it's very natural, very healthy for anything to have gone up a lot over a period of time to take a breather. And maybe, just maybe, that is what is happening to NASDAQ. The most important thing, it's not dropping like we saw back in July of last year or April of last year. It's not dropping. So I think the market is just undecided when it comes to the NASDAQ, but just going sideways right now. And to be honest with you, nothing to be overly concerned about at this point in time with the NASDAQ. But overall, the weekly trend is up. Yep, the weekly trend is up. It's been looking good forever. The NASDAQ has been looking good forever. In fact, the COVID-19 is just a blip on this chart. It's a very small blip. And that's why this is one of the best indices and why America, United States, have some of the best companies in the world because they're growth companies. They're going to be much bigger over the next, or in the next 10 years. Now, Dow Jones is, I suppose, it does feature some companies on the NASDAQ, I believe. Anyway, so Dow Jones Industrial Average, 45,000 is the important level for this company. This is the weekly chart. So we did see a little bit of a sell-off in the Dow Jones in the last few months of 2024. And we've seen it rally over the last 4 weeks. And it's gone back up towards 45,000. And 45,000, well, not, I was going to say 45,000, just like the, what was it? The small caps on, or the XSO is an important level. But for the XSO, it's a different level. But there is, or the Dow Jones is an important resistance level. So we can see that just by looking at the daily chart. Now, not quite as important as the XSO because the XSO has touched their resistance line twice before now. But Dow Jones touched 45,000 about a week ago and has pulled back, not a lot, but has pulled back. So 45,000 is the key level for the Dow Jones right now. If the Dow Jones gets above that, that would be a nice little bullish move. And really, that would confirm that Dow Jones is still in an uptrend because the definition of uptrend is higher highs, higher lows. And so we need eventually a high high to confirm any uptrend. So Dow Jones still looks pretty good. No worries about this one. And the Russell 2000, probably not as good as Dow Jones and the NASDAQ, but definitely better than the small caps in Australia. I've got this purple box. I've had this purple box in for a while. This purple box has either acted as resistance or support. Right now, the Russell 2000 is just above that purple box, so it's more acting as support right now. It looked a little bit, what's the word? Sketchy. Probably not the word I was looking for, but sketchy back at the start of 2025 when the Russell 2000 did fall below that purple box, but it recovered fairly quickly. Overall, still looks okay. I'd like to see that the Russell 2000 gets above 2,500. At the very least, get above 2,450. I do want to see a new high when it comes to Russell 2000. And that previous high is a fair while ago now, 25th of November. So that's over 2 months ago. So we do want a high sooner rather than later. Okay, so not quite as bullish when it comes to Russell 2000 as I am with the NASDAQ and Dow Jones, but probably the most bullish chart or indice is the German one, the DAX. So we'll have a look at that in a second as we turn attention to the international indices. Starting with the Nikkei, I'm just going to say this is going sideways. This is probably one of the most boring charts you'll ever see. It's been going, so the Nikkei has been going sideways for a year. So the Nikkei reached this level towards the end of February. So we're almost 1 year ago where the Nikkei got to this level. So it's been going sideways ever since then. In between that period, so 1 year ago and now, we just had that yen carry trade debacle at the start of August. But if you take that out, Nikkei's just been going sideways. So consolidation period, taking a pause. And just like the NASDAQ, this could be a little bit of a healthy consolidation period because the NASDAQ, or not the NASDAQ, the Nikkei has gone up significantly over the last 10 years. And during this period, you do see going sideways for long periods of time. Nikkei went sideways for about 3 and a bit years, 2021 into 2023, and then it went up a fair bit, and now it's going sideways again. So this is sort of a natural progression for the Nikkei. It looks just based off this chart. Hang Seng does look really good. So weekly chart, you can just see by the weekly chart, a really good week for the Hang Seng, up 4.5% for the week. And when we turn attention to the daily chart, it's right on the previous two highs. Not quite near the highs we saw around the stimulus rumors or whatever back in October last year. But a nice looking chart for the Hang Seng. So definitely if it gets above, say, 21,500, the next step would be getting above 23,250, which was the highs in October. So better looking chart for the Hang Seng. This has turned around over the past few weeks. It was looking a little bit, again, sketchy. I don't want to use that word anymore. Back in early January, or actually that's mid-January, when it was looking like it might drop below 19,000, but it's recovered really nicely since then. So Hang Seng's looking much better than it was just a few weeks ago. Now onto one of the most bullish looking indices, if not the most bullish, and that's the DAX, which is always interesting. It did get its all-time high on Friday session. Even though it did drop 0.53%, it did start on a high, get to a high just after open. And this is, I think, by far the best looking indice chart. And who could believe that it's a DAX, the German indice, where not only the German economy, but many European economies are in the tank. They're doing horribly, yet the DAX is one of the best looking indices charts you'll ever see. Maybe not ever see, but right now it is by far the best looking chart. So who would have thought of that? Not me. Now, in saying that, DAX looks pretty good. The FTSE broke out, was it 2 weeks ago? And has continued to go up, I think. Yep, broke out 3 weeks ago. In fact, almost 1 month ago. 17th of January. This is actually the sort of breakout I always look for in any sort of chart. So the FTSE had been going sideways for about 7-8 months, just trading in this range between 8,000 and 8,400. Whenever it got to 8,000, you bought, if you could, this sort of indice. And if it got to about 8,400, you sold. And then on the 17th of January, it broke out above that on strength. Really good one-day movement in the share price, on the indice on that day, up 1.35%. And then we didn't see it pull back at all. That's a really positive sign. And since then, it's gone up quite nicely. So this is actually a nice looking chart. This actually might give DAX a run for the money because we had the nice, healthy consolidation period for an 8-month period. And if I saw this as an individual company on the ASX, I would be really interested in taking a position in this company, if it was a company, but it's an indice. Okay, so that's the indices around the world. Some of them look really good. So probably my favorite at this point in time are the FTSE and the DAX. Which is weird. They're both European. Well, okay, I suppose the FTSE's not. They don't want to be called European anymore. Okay, now on to commodities. And we have some really interesting commodity charts. Now, gold has been looking really good for many years. For many, many years. In fact, gold broke out. If you have a look at the weekly chart, gold broke out. When did it break out? That's right, it broke out in March. So 1 year ago. That was really the breakout. I still remember that because there was a false breakout in December of 2023. I still remember that because they were talking about that breakout a few days after it happened, yet it was a false breakout because the price of gold fell back below 2000 and was it 2100 or something like that, and we had to wait another 2 months for the real breakout. So sometimes you will see false breakouts, and then when it broke out, that was back up your truck. Maybe not that extreme, but a really nice breakout. This is a perfect example of a breakout, something I'm looking for every single day. And it happened in March of 2024, and price of gold has gone up significantly since then and continues to go up. Whenever gold gets towards a 25-day moving average, it seems like it's a buy. Yeah, so beautiful chart for gold. That's the weekly chart. In fact, it's had 1, 2, 3, 4, 6 weeks up in a row. Might be getting a little bit nervous about that. So it'd be very healthy again for gold to have a little bit of a breather here. And if you have a look at the daily chart, nothing wrong with this chart at all. Went above the previous high back about a week ago. So Thursday, Friday last week. What can you say? This is a beautiful looking chart for gold. And I suppose most gold companies on the ASX, their charts look pretty good. Not all of them. Some of them look really weak. I'm thinking of Bellevue Gold. I'll just have a quick look at Bellevue Gold just to see what this is doing. Yeah, this chart does not look good. So the individual companies' charts, or not all of them look good, but quite a few of them do. So you still got to pick which gold companies. You just can't pick one randomly. Okay, so let's go have a look at silver. So you expect gold's looking really good. Silver should look really good. Not so. This could be leading to an opportunity in the future because definitely silver is not looking as good as gold. Silver is at $32.50, and that's an interesting level. And this level for silver has been looking interesting since May last year. It was actually a resistance point. It got above that level on strength 18th of October and then fell below it fairly quickly. And since then, it's been struggling to get back above it. We saw it try in December and then pull back. And now it's trying again. It is really struggling. You can see it. It's been oscillating above and below this level for the last 6 trading days. In fact, if you look at maybe the 1 hour, yeah, you can see it. If you look at the 1 hour time period, it got above it on the 31st of January, and it's just been oscillating above and below that level ever since. And right now, it's just below. So that just tells us that there is a bit of toing and froing from the bulls and the bears, and no one's winning at this point in time. What we really want to see is I'd like to see silver get above $33. We'll say $33.50. That would be a really bullish move for silver. So silver is not one of the ones, or not one of the commodities that is looking interesting right now. But the next one is copper. Copper's looking interesting. A really good week for copper. In fact, copper was up. What was it up? 7.24% for the week. I would say that's probably the best week copper has had since May of last year, when it was up 8.3%. Unfortunately, after that really good week in May of last year, that was almost the peak. And then it had a really big down week the next week. In fact, it was down 5.9%. So will we see that again this or next week for copper? So really good week for copper. And the daily chart looks really good as well. Important level for copper is just above where we are now. So it is moving towards a resistance level, which was the highs we saw back in September. So I'd love to see it get above this dashed line, which is about $4.69 or so. So copper looks pretty good right now. Did get above the previous high. That's the first bullish move. So the highs, not that long ago, like a month ago, but it got above those highs. And this does look good. So I do like copper. I only have one copper company right now, and that copper company is Hillgrove. And unfortunately, they released a negative report. Well, a report that was perceived negatively by the market. I think the market is overreacting. And I'm just thinking this should be sort of moving upwards, but it's not. So again, individual companies' charts, even though they are mining the commodity, it looks pretty good. Chart looks good. It doesn't mean the individual company's chart will look good. And that's true for Hillgrove Resources. Next, another interesting looking commodity, and I am thinking of maybe taking some iron ore positions. So it's iron ore. This is starting to look really interesting. So I would say it wasn't a bit of a downtrend. It's actually been in a downtrend for a while. It had a couple of false breaks, but this is the sort of chart I do like to see. The price of iron ore wasn't really doing anything for about 5 months or so. And over the past few weeks, we just seen the signs, the first sort of signs. We are starting to see a little bit of bullishness in iron ore. And I do like this chart. The week was pretty good, not like copper good, but up. It's only up 0.9%. It looks a little bit better on this chart, but I do like this chart. And I think it was last 3 trading days. So it was up on Wednesday by 2.1%, and then Thursday by 0.4%, and up another 0.9% on Friday. So it looks pretty good. I'm pretty sure that's Friday. Let's have a concern. Sometimes, yeah, this is Monday. So for some reason, we've already got Monday in the chart. I'm not sure. Maybe the Monday session finishes sometime in Monday, and that means the Monday session has already begun. I don't know. I don't know how they do this, but it's looking pretty good. I like iron ore, and there's a few companies I'm eyeing off, including, well, BHP. You always got to look at BHP first. Let's have a look. BHP. The chart doesn't look that good, but it's nearly $40, which is a good level for BHP. Fortescue, does this look any better? This one is starting to look a little bit interesting. If we start to see the share price get a little bit more above $20, the chart would look good. Rio Tinto. I'm not sure why I'm going through all these. I've got an iron ore watch list. Rio Tinto, Mount Gibson. I'm going to say Grange Resources. And Grange would really benefit from a higher iron ore price. You get a little bit more leverage from these smaller companies because, because you just imagine, say they're spending, it costs them $100 to get iron ore out of the ground, and iron ore is $105. If iron ore just goes to $110, you can just see that leverage. They're getting $5 for a bit of iron ore, ton, whatever. Now they're getting to $10, so it's doubled. That's why I'm saying there's a bit of leverage for these companies who spend a little bit more getting iron ore out of the ground. You just compare that to, say, Fortescue. If they're paying, it costs them $20 to get iron ore out of the ground, and price of iron ore is $100. If it goes up to $105, there's just a little bit of a gain for Fortescue. So that's why when iron ore prices might go up a fair bit, I would probably prefer to play the smaller companies. So maybe Grange, maybe Mount Gibson, but definitely got my eye on Phoenix. This could be a longer-term play. I do like their diversification, and in fact, the chart probably looks the best out of all the iron ore companies I've just shown you. So even though the share price is a little bit higher than what I'd like, it's not that much higher. So $29.50. So this could be a little sneaky buy below 30 cents. Okay, so that's I did include Phoenix in my individual charts, individual companies charts. I might get rid of that one. Okay, so that's iron ore. It's looking really good at this point in time. What about uranium? So still, there's a lot of talk about people being very bullish about uranium. Maybe in the longer term, but let's have a look at the chart, and you might get a different perspective if you just have a look at the chart. In fact, if anything, I'm bearish on uranium right now. Now, this is a spot physical uranium. This is a good proxy for the real uranium because it's spot physical uranium. But you notice the price is a little bit different on this particular instrument. Now, I have no even thoughts about this one. This is negative. There's no reason to be even thinking about being positive about uranium. I would become positive if uranium gets above this sloping downward line. That's a downtrend for uranium. And at this point in time, that would be, say, around about 25.50. So still a little bit off that. Just not that long ago, uranium fell to its long-term low. The chart looks ugly at this point in time. There's nothing to say about uranium. So I'm not even interested in any individual uranium company just because of uranium prices at this point in time. Now, it might turn. And the more it falls, the better it might become for those individual uranium companies. What about oil? We all know that oil price hasn't changed over the last 20 years. For those who don't believe me, let's have a look at oil prices over the past 20 years, just by looking at a weekly chart. So this is going back to 2005. Iron ore prices in 2000, well, they have, if you go back to 2005, they were increasing. It was in a nice uptrend, but the first time iron ore got above $70 was in October 2007. So we're talking about 18 years ago. And since then, nothing much has happened with oil. It's just gone sideways. And who knows, with Trump's drill, baby, drill, whatever, that could lead to an increased supply of oil on the market, and that should decrease the price. But again, OPEC. Who knows what OPEC will do? If they see oil prices down, they might suppress production. Just don't know. Anyway, so in the past week, oil has fallen a fair bit. In fact, in the past week, oil down 3.8%. There you go. And you'll probably be able to see this on the daily chart. Yeah, oil went on a nice run. I forget why it went on a run. I can't remember, to be honest with you. And it's fallen since then. It's fallen all the way back down almost. I would get maybe interested in oil if it gets to $60. I think that's sort of the low. I don't think it can get much lower than that. And right now it's at $70. So oil is just, I just have no interest in oil. It's really weird because Woodside, there's one guy on Aussie called a technical analysis guy who has recommended Woodside a few times in the past, and I just don't understand just by looking at the chart. He recommended Woodside sort of September, October last year. I just didn't understand it then, and he's done it again. I still don't understand it. Still don't understand the chart at this point in time. It's a meh for me. Anyway, so that's oil. We'll go through the other commodities fairly quickly. Natural gas. Let's pull back a fair bit. Lithium. Have a look at the weekly chart for lithium. No really interest in lithium at this point in time. Probably at the bottom of the cycle, but we just don't know. I'd say more than likely it is. When I see lithium's prices started to rise, that's when I will become more interested. A way to play this is actually take positions in some lithium companies before lithium prices start to rally, but we just don't know how long lithium prices will be at these levels. In fact, it could drop. So probably the best way to play it is just to wait. You might miss some of the upside, but you might. The problem with not waiting is you might need to be patient for 2 or 3 years. We just don't know. Coal. Oh, coal is looking a little bit negative here. Coal. Oh, it's looking really bad. It's down to this daily coal chart looks pretty ugly. I'm just thinking of some of the gold plays on the ASX now. Or not all. I'm not sure. I think pretty sure Newcastle Coal is. I'm not sure if it. What's the two? It's thermal and what's the other one? Thermal and there's another one. Anyway, I'm not sure if this includes both or if this is thermal or maybe the other one, which I've forgotten for some reason. Let's have a look. So Yancoal fell a fair bit on Friday. Yancoal fell 5.8%. No interest in that chart. And to be honest with you, I probably wouldn't be interested in any of these charts. New Hope. No, look at that chart. It's just going sideways. And Whitehaven, based off what happened with the other two, this will be down as well. Yeah, so there's, I can understand why these charts look pretty bad because coal itself is looking weak. About tin. We have a few tin companies on the ASX, and interesting week for tin. A nice week for tin. In fact, tin was up. Not Tim. Tin was up 4%. Funny enough, this is a weird weekly chart. So this week here is 5th of February, Wednesday. All the other ones started on Monday except that one, which was Wednesday. That's weird. Anyway, so tin looks okay. No, I'm going to say it looks not bad. The reason I say that is because the last time tin was at this level was back in November. That's like a few months ago, so not that good. Nickel, we have to look at weekly chart for nickel. I don't think I would ever have any interest in nickel. I did read about nickel's problems and how this could be long-term problems because of China and Indonesia, how they flood the market or something like that. And that was just saying that this could be long-term issues with nickel. So no interest in nickel at this point. And of course, Palledium. And Palledium, meh, just a big meh for me at this point in time. So nothing to really see with Palledium. And of course, cocoa. Haven't bought any chocolate for a long time. And chocolate prices seem to be quite high. And cocoa prices are starting to drop. Go cocoa. Now on to Bitcoin and Ethereum. We'll start off with Bitcoin. Dropped below $100,000. Of course, Bitcoin has been oscillating between 92,000 and 106,000. And right now, it's more towards 92,000 or the bottom of the range. Whenever, by the way, I completely missed this last week. If you have a look at the 1 hourly chart for Bitcoin, you'll notice the massive drop in Bitcoin. This was on, Monday. So Bitcoin dropped all the way down to 92,000. And what's 92,000? It's a support level. You can see a massive drop in Bitcoin down to a low. In fact, it was a low of 91,530. And then it rallied all the way back up to 102,000 within like a day. Or maybe not a day, because that's, within a day. It rallied all the way back up. Not sure what happened. This was around the tariffs, that sort of thing. So you can actually see that on the daily chart, how 92,000 again has acted as support for Bitcoin. It's been doing it for a while now. It's been doing it for 3 months. Okay, that's not a while, but it's been doing it for a while. And 106,000 is resistance level for Bitcoin. Ethereum, really noticeable the sell-off in Ethereum. If you have a look at the 1 hourly chart for this particular, it happened at midday on Monday. Ethereum dropped to 2,118, and within a day, it rallied all the way back up to 2,850. So it rallied, 60% in 1 day from the lows. So a bit of panic selling, I suppose, at that hour, midday on Monday. Massive volume coming in. That was capitulation, and Ethereum has recovered. But if you have a look at the daily chart, I don't like this daily chart. So if I had to compare Bitcoin, or if I had to pick one, Bitcoin all the way here, just based off the chart. I could actually see, just based off this chart, I could see Ethereum dropping all the way back down to 2,100. And 2,100, so here's another thing. So people go, technical analysis is crap. It doesn't work for various reasons. But you see evidence of it working all the time. 2,100 has been a support level for Ethereum for a while now, going back to August last year. We could see it pulling off, or something jumping off 2,100 in August, got very close again in September, and then it pulled back from 2,100 during last week's or Monday's sell-off. So I could imagine maybe Ethereum falling all the way back to 2,100 as a nice support level, and that could be a nice buy opportunity for Ethereum if you want to. Now onto some bonds. And we'll have a look at one bond, US 30. Then we might have a look at TLT, if we see anything interesting in the 30-year. Bonds has pulled back. So it got to 5% and has pulled back all the way down to 4.6%. Looks like it might be trying to bounce off the 100-day moving average. It did it back in December. We'll see if it does it again. Not only that, you can put a little line there. This is a nice little support area for bonds. The reason I put that there is because we could see the peak in bonds back in November was this level, and then it went lower, and then it zoomed back above that level, which means it broke above that, so the resistance level. And now bonds have pulled back to that level, has tested it 3 days in a row, and we saw it rally a little bit on Friday's session. So that could be just because it's a support level. That's it. It's now a support level. Anyway, so that's 30-year bonds, and TLT probably has rallied over the last few days. I did see some articles saying this should be many people's choice. I don't know why, but I think it's just on the basis that bonds have reached the height, bond yields have reached a peak of 5%, and this more than likely will be a nice little rally, a nice little play over the next few years. And that's on the presumption, or the assumption, that bonds have reached their peak. If they don't, then TLT would be a terrible play. And of course, the Aussie dollar, 62 cents, staying above that level. That's good. We want to see it stay above this level. And of course, we want to see Australian dollar rally all the way to $5 American. So my trip to the United States in September will be really cheap. We all want that to happen, don't we? Yes. And of course, imports will be much cheaper for us. We could buy TVs for like $5 if that happens. Oh, okay, and that's not true. Although I would say most imports-exports or most imports are in American dollars. I've heard that before. I'm not sure that's absolutely true. I don't know how imports-exports works, but I have heard that most of imports-exports are in American dollars. That was an American podcast who said that, so they could just be referring to America. So all the imports from overseas are already priced in American dollars. Anyway, they were talking about whether the American currency or the strength of American currency or the weakness in American currency would affect imports and exports into the United States. And the argument against it would be saying, well, no, not really, because it's already priced in American dollars anyway. So the strength of American currency doesn't really affect imports and exports. Okay. Now onto some individual companies charts. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 13. 13. Let's start off with Acrow Limited. And this chart looked really good for a long, long time. And then it didn't look good for a while, and now it's starting to look good again. Starting to move into an uptrend. Share price has moved to $1.16. Last time share price was at this point, or this level, was back in August last year. So we are talking about a 6-month high for Acrow. A way to play some of these would be just to wait for the half-year or full-year results, because it could be a false break. But maybe the market is thinking here, the results might be pretty good. So we're getting in before the results are released because we think they're going to be good or positive. And this could be a nice little play. So definitely one for your watch list if you haven't already got it on it. Deterra. So a lot of questions I did receive when I took a position in Deterra. This purple box was my buy price. I was a little bit too impatient. I should have just waited. So as soon as I got to the purple box, I took a position in Deterra. I think the market completely overreacted to their dividend policy. They said 50% minimum. That was a minimum. It's not an absolute. I do think the market overreacted. A bit of maybe not overreaction, a bit of negative reaction to that acquisition they made. And I sort of can understand that. But let's just put all that aside. This chart does not look that bad now. We had a moving average crossover. A few weeks ago, share price has rallied to $4.20 for 18. And the last time share price was at this level was just around that negative period when they changed their dividend policy. And that was in June last year. So we are talking about 8-month high in share price. I do like this chart. So no reason for me to sell my position. This company wasn't really a long-term position. What I was doing when I bought it for, I expected the share price at some point to rally. Now, I thought maybe they'll rally off that level. And then I think the upside to Deterra is as much as, say, $5. So I'm expecting a 25 to maybe 40% rally in Deterra price. And on top of that, maybe some dividends. Anyway, other than that, I don't think this company is a long-term hold. So Deterra chart looks like pretty good. A company I don't know anything about. Alfabs, I'm pretty sure this is definitely a new listing. It listed on the ASX back in July. I'm pretty sure this has something to do with mining services. I could be mistaken. It looks like with Alfabs, it's got labs in there. So initially I thought this was like a scientific company, a healthcare company dealing with labs, but I was confused by the name. I'm pretty sure it's mining services. Gauges and provision of mining and engineering services. Yeah. Anyway, so it's not about what they do, it's about the chart. And I just like how the share price is in an uptrend since they listed. That's a good sign. Possibly the market is optimistic. I was going to say pessimistic, but that's combining pessimistic and optimistic, which is not a word, because then it's just neutral. I think the market might be optimistic about their results. So I'm looking forward to these results just to see what happens. So this is actually a nice looking chart for a company that recently listed, and I'm looking forward to their results. So Alfabs, AAL, I'm pretty sure this company is profitable. Market cap is about 140 million, if I remember correctly. I could be wrong there. Market cap is 116 million, according to TradingView. And in the last year, they were profitable. Not a lot, but they were profitable. I would say the margins are fairly low too. Ebos, EBO, share price has really taken off in the last 2 weeks. This would have been a company I would have shared with you last week, but for some reason I didn't. I think I was looking at 6-month highs last week. Share price broke above $35. $35 was a very important level for this company, and it's been a very important level for well over a year. And then all of a sudden, it just broke above it, on Thursday, the 30th of January, which is why I wanted to show you this company last week. And share price has continued to rally since then. I'm not sure what has caused the excitement in this company, but there is excitement in this company right now, and the chart looks pretty good. Looks pretty good. I like to see a little bit of a pullback, or at least the share price goes sideways, but the chart looks good. Karoon Energy, not many oil companies charts I do like at this point in time. This might be the most interesting. I think there was a little bit of excitement in this company because some reason last week, share price did pop up. I forget why. Why was there excitement in this company again? I remember the share price popping up, and it was for some reason. Was it the fourth quarter? Oh, the buyback, additional buyback, fourth quarter report. Oh, yeah. The Who Dat West exploration well update, the 20th of January, was not positive. I'm pretty sure the share price fell on that day, yeah. But it was really around that update and that buyback. Share price did rally on that. Share price has pulled back a little bit, which is understandable because price of oil has pulled back. I do think there's definitely an argument that Karoon Energy is of good value at this level. But the chart, not perfect, not great, not like Acrow or Deterra, but it has potential. And I think there will be a crossover in the moving averages in the next few days if the share price doesn't pull back significantly on Monday. APA Group. Okay, so this one is interesting just where the share price is compared to historical levels. Share price is at 12-year lows. Last time the share price was this level was way back in 2014. In fact, the chart then looked pretty good. This could be the start of a long-term downtrend for APA Group. I'd say there might be some value in this company, maybe. So if you just had a very quick look at dividend yield, 8.8% dividend yield and PE ratio of 8.6. Not sure you should be looking or relying on the PE ratio. I'm just wondering why the market is selling off an APA Group. Maybe it's debt, too much debt, or maybe it's outlook, any sort of outlook. Maybe the market is anticipating some weak financial results from this company, but the share price is at a 12-year low or something like that. Other than that, the chart looks pretty ugly. So this one is all about value. Is there any value at this level? And I'm bringing up my value history, my value background. I am a value investor at heart. I'm changing a little bit, but at heart, I'm a value investor. It's interesting because I do have a lot of tech companies like Pro Medicus, WiseTech, Zero. I have all these companies in my portfolio, and if I was a value investor, I wouldn't have those companies in my portfolio. So even though I would call myself value investor, I'm not a traditional value investor. I see value even with companies who look like they're overvalued because I think the market is underappreciating the sort of growth these companies can experience. And I think that's very important. I think a lot of the stereotypical value investor would never ever buy those companies. And I think that's wrong. I think they are doing themselves a disservice, a massive disservice, because these are the growth companies. Growth companies are spectacular. That's when you're going to get really good returns. A lot of value investors just look at companies that don't grow at all, PE ratio of 8, 1% growth, and they think, oh, that's really good value, but you don't get much return from those companies. Anyway, OFX Group. Okay, so this is an interesting one. So I've mentioned now a few times in the past week that one of the signals I want to do a little bit more research on is when the share price of a company drops a lot in one day, and then that's it. That's the low. You don't see much more selling after that. That can be a signal that all the negativity has been priced in. And I want to do a bit more research on this because I'm thinking there is potential I am just cherry picking a few examples, and maybe historically it doesn't really happen like this. So I don't know how I'm going to do it. But anyway, this is a case where the company OFX Group did release something really negative in October. Share price dropped 35.8%, but it hasn't really dropped since then. So I'm thinking, is this the low? Has the low already been reached? And is there upside here for OFX Group? I'm just thinking that based off that thought that if the share price doesn't drop, I'm not sure what time frame I'll be talking about, but definitely this is long enough. If you don't see the share price drop after a negative report or negative announcement, then maybe everything's been priced in. Okay, so that's OFX Group. maybe the low has been reached and this could be a very cheap play, maybe. But if you look at the weekly chart, it can go lower, but this level does seem like it's support going back to 2023. And the upside, there's share price could double just based off the last few years. Next company I want to look at is, Ingham. This is like a squeeze. You can see the 2 moving averages coming together and going sideways because the share price is going sideways, consolidation period. If you used or looked at Bollinger Bands, you probably noticed that Bollinger Bands are squeezing together. So lack of volatility. And the rule is when you do see really low volatility, eventually the volatility is going to explode. And that's when you might see a breakout in the share price. It could happen tomorrow. It could happen in a week, a month, a year from now. But that's what I'm thinking of when I see Ingham's Group chart. I'm thinking the share price will eventually break out. Question is, will it break out positively or negatively? Don't know. So do have my eye on Ingham's Group's chart just because of that reason. A2 Milk, blast from the past. At one point in time, I did think this was a quality company. Well, quality company in the making. I don't think that now. And we do have did see a moving average crossover, and probably looking the best it's been for a while. So did not have this on my watch list. I will put this on my watch list now. In fact, I'm going to do it right now as I speak. There we go. Now, I do have this in a few of my watch lists, but those are watch lists I don't look at all the time. So it's in my food watch list. It's not, well, I suppose it's milks. Is milk food? Yeah, food and drink. Anyway. But when I put that into my other watch list, I look at that watch list every day. So I'm looking for any sort of signal or sign that this could be buy soonish rather than latish. CSL, 4 more to go. So why CSL? Because the chart looks pretty ugly. Why CSL? It's fallen below 270. I think 270, if you want this company for the long term, 270 is a good price. It could fall to, say, 260, better price. And if it falls to 250, great price. So it's getting to the point where I think if you want some shares in this company for long term, it's getting to that level where I also think you hear a lot about fund managers just trading this, buying when it gets below 270, selling when it gets above 300, that sort of thing. It's a nice 10% trade, and it is getting to that point. So that's why I have included CSL, just because it's below 270. It could drop even further, could drop to 260, but we'll wait and see. Cleo Diagnostics. Okay, this one did pop up. Share price rallied 20.83% on Friday session on pretty big volume. So I saw this, and then I had a look at the reasons behind it. There's no reason. Cleo Diagnostics, nothing to do with magazines or teenage girl health, if Cleo dies, or something like that. I never looked at Cleo magazine when I was a boy. Wink, wink. Anyway, price query response is telling us that the company did not release anything. And the ASX asked Cleo Diagnostics, do you have any information or any news flow you have yet to release to the market that could explain why the share price is up 24.29%? Why is it up 24.29%? But in TradingView, it's up 20.83%. You can see it closed at 43.5 cents in TradingView, but in CommSec, right there. It did close at the same price, but the reason would be simply because of Chi-X. CommSec includes Chi-X. I'm pretty sure TradingView does not. And if the last trade on Thursday session was Chi-X or Chi-X, that explains why the share price closed at different prices. So on Thursday session, on TradingView, share price closed at 36 cents. And in CommSec, the share price closed at 35 cents. So that's the reason why. If you have a look at the summary course of sales, you'll notice in the market, you'll see ASX. But, yep, you can see on occasion, you see CXA, that's Chi-X. And some systems don't recognize Chi-X at all. And I think TradingView is one of those because CommSec does recognize it. And we know it recognizes it because it's in there. And that is why also sometimes the volume can be different. So the volume in CommSec is 546,000 shares traded. And in and in we don't see, and in TradingView it's 500,000 shares traded. So that's a discrepancy between including Chi-X and not Chi-X. So that's the reason why there's a bit of a price discrepancy. But the most important thing here is share price has popped up on no news. So there's a chance the share price might drop back. But anyway, this is a potential breakout. So I thought this is a potential breakout. If the company released anything positive, I thought they didn't because I didn't see anything, and they didn't. So not a classic breakout, according to my definitions. Noble Oak. I actually had a look at this one, not because of the chart. Possible value play. A recent listing. When I say recent, I'm thinking 3 years ago. Yep, 3 years ago. Insurance company. I had a look at their full year results. The P/E ratio of this company is below 10, and they're growing. So this is being completely overlooked by the market, I think, at this point in time. But the chart looks ugly. So I'm just putting this on my to watch list when they release their results, because if they release some really good results, the share price could take off because of the value reasons. I have looked at research. So even if you do just look at charts, looking for breakouts, that sort of thing, value even then matters. So value matters when you're fundamental analysis, even matters when you're technical analysis. So if you had a choice between two companies whose share price were breaking out, choose a company who was better value. So value even matters when it comes to technical analysis. So I should have actually saved that particular paper. I did read that paper many months ago. I should have saved it because I was trying to find it the other day and I couldn't find it. And Megaport. So Megaport got above 850, which was the previous highs. This chart looks interesting. Now, this chart started to look really interesting in August, just before they released the results. And I thought, oh, the market's expecting some really good results. And no, complete opposite. Share price fell 21% when they released the results. And so maybe the market's doing the same thing here. The market is expecting some good results from Megaport. Who knows? It could surprise, could disappoint the market. But anyway, the chart looks okay now. Share price looks like it's trying to rally off the lows of 650. Anyway, so that's all I have for this particular technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.